All right, good morning, traders, and welcome to the opening bell. Today is Wednesday, May 13th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. We got the release of an explosive PPI print earlier today, showing that producer prices and wholesale prices are really starting to increase the pace and basically suggesting that inflation is coming down the pipeline for consumers. So on the back of yesterday's hotter than expected CPI, we get another hotter than expected producer price index. And this is all in the backdrop of a strong labor market. So we're getting decent, strong NFP reports. We've gotten really strong weekly jobless claims reports. So again, markets are continuing to price out any rates for further easing or any moves for further easing of rates from the Fed. Dollar looking for a little bit of a breakout here. We'll take a look at all the US dollar crosses, gold and oil. Any questions or trade setups, feel free to throw them on the message board. We'll be getting started in just a second. All right, great to see everyone in the room. Ahmed Ashish is here. Dan, DeRay, JP's in the house. Yana, Mesfin, Robert. Great to see everyone this morning. Here's DXY. So remember the two levels we talked about. The 200-day moving average is being challenged basically right now as we speak. And then just higher, that line in the sand, that 38.2 retracement of the broader decline off the highs from March, the August high day close, the May lows, all of that's 98.78, 98.69. So we're coming up on some major levels, this being the major pivotal zone that would validate a more significant low is in place. A larger trend reversal is underway. And certainly that would invalidate that late March downtrend. So for the DXY, approaching resistance, we are flagging a near-term breakout, but the validation isn't quite there just yet. Here's euro dollar on the same note, breaking that near-term uptrend from last week's low. Remember, we were talking about this as just a 2-point trend, so we don't want to stress it. This was the first hurdle, the objective monthly open and the objective yearly open. Not Mike Boutros' opinion, not Forex.com's opinion. Fact, there's the break. So if euro is heading lower on this stretch, rallies should be limited to 1745. At the end of the day, key support is still well defined. 1667, 1681. You got that swing high from March, the 200-day moving average, and the 38.2 retracement of the advance off the yearly low. All factual, objective levels. That also is defined now by the objective monthly opening range lows. So any way you slice it, that's the key hurdle of support for euro dollar. Initial resistance 1745, key resistance still back up at 1813, 1826. That's the lateral level that caught the rally last month. That's the rally you would need to mark assertion back for the long side for the bulls. All things held constant near term, the threat is for deeper pullback below 1745. Key support 1667, 1681. As always, guys, not a trade recommendation from Forex.com or StoneX, just my humble interpretation of the technicals here as euro sinks to a fresh weekly low. Here's the British pound. British pound on the other side has confirmed the break. Remember, we were looking at this yesterday. The Thursday low was our line in the sand. You had that upslope support in there. We broke below it. And yesterday we were discussing whether that break was legit. It looked like it had lost some momentum. Here's the rebound in overnight trade, finding resistance at former support, at former slope support. And here's the push lower. Now, the major lateral level hasn't been hit just yet. It's 34.65 into 34.73. The objective yearly open, the close, the low day close, and the close low from February, those swing highs from March, really nice pivot zone, right? That's the break. Again, that would validate more significant highs in place, larger pullbacks underway. Till that, basically the near-term short bias is vulnerable into 34.65, 34.75. So look for a more significant, prominent, meaningful inflection off that zone if reached. Near-term resistance 35.47. Bearish invalidation for this one would be right at the weekly open, at the monthly open, rather, not the weekly open, the monthly open where those dots are. You're basically looking at 36 proper. That's the breach that would open up the resumption of the long trend. That's the British pound. Aussie dollar. So really tight, contracting range since the start of the week. This works to our benefit because it's happening at an absolutely critical zone. I put a piece on this on FOREX.com yesterday. Probably one of my favorite setups. It still hasn't actually materialized, but I think the setup is really nice. You're looking at the objective monthly open 72 proper, 72 fractional 7 to be exact. You're looking at the 618 retracement from the decline off the 2021 high. You're looking at the 100% extension off the 2025 low. My favorite fib confluences and the monthly open converge on basic uptrend support. You can see it clear on the 4-hour chart. I'll show you that in a moment. So you're sitting right above former resistance, turn support. You're sitting right above uptrend support, and the weekly opening range is preserved right there. Meaning, if you get the weekly range pop to the upside, 73 all day long. That's the 618 of the November rally, the extension of that November rally. That's the objective 2019 swing high. That's uptrend resistance. A break below this level would suggest the threat for a pullback within that uptrend. So you'd be looking for 71.36 max, 71.08. That's that swing low from last month. And you have the median line right there over the next couple of days. So it's basically like decision time at the highs. Now, things that are suggesting that we might be in for a bit of a setback. You're seeing ongoing momentum divergence on the daily momentum oscillator. So the RSI, you see a series of only looking at the closes, right? When we're trying to ascertain divergence. Higher high, higher high, higher high, higher high, higher high. No new highs confirmed in the oscillator. So the top side might be waning. That's not a reason to be bearish, though. Here's the 4-hour chart. This is another slope. This is a near-term slope just off the lows from March and the late March low. I've been showing you the same exact one. Nothing's changed. Here's the slope you're looking at on the daily chart. 1 touch, 2 touch, 3 touch confirms. It's right there. Those dots there, that's your monthly open. That's the 618 retracement. That's the 100% extension. All of it converge right here. Your weekly opening range, you set a high, you set a low, you test the high, your low is in place. You've got a nice weekly opening range set right above support. A little bit higher is key resistance into 73. So if we buckle below the median line, which is also right in that same zone, put a cherry on top of that, then you're looking for the potential again for a larger setback within the uptrend. Top side breach of the objective weekly range highs you're looking at is essentially 72.60s. You would be looking for another 40 pip stretch back towards that 73 handle where you're running into a little bit more of a significant resistance. The 75% parallel is there. Remember, on the daily slope, the longer term multi-year slope is there. So the levels are absolutely spectacular. Let's see if we can't get a break of that weekly opening range. Next event risk on tap. There's not much out of Australia, but we still do get retail sales out of the United States tomorrow. That's another update on the consumer to see whether the price. What we're seeing in the recent data, guys, with CPI hotter than expected, but not like blowout, right? Here's PPI. I never showed it to you. Here's what it looks like. Huge, more than doubled expectations. 1.4% on the month-on-month versus 0.5. Month-on-month for the headline comes in at 1% versus 3. The headline comes for the year-on-year 6% versus 4.9. 6%. Core year-on-year is 5.2. So even if you're stripping out food and energy on the producer side, it's 5.2%. So with this hot number on PPI and CPI coming in slightly hotter, 3.8 versus 3.7, 2.8, it's suggesting that it's coming down the pipeline, guys. The price rise comes for the producers first. They try to internalize and eat that cost as long as they can. Then they start to raise prices on the consumer, and there you go. That's how the sort of the backwash of the system from that price increase in energy. So that's not good. That's not good for the Fed. It puts them further in that rock and a hard place. And that means we're probably going to be seeing rates at a higher clip. Guys, look at the CME Fed Fund Futures. January is basically a 50-50 shot for a potential rate hike of 25 basis points. You got 10% calling for a 50 basis point. So this is quite a shift. And this is part of the backflow that you're seeing, not only for the support in the US dollar, but also the weight on gold. it's been interesting. There's been a lot of commentary floating around there that, gold is kind of acting weird because the spike in energy prices, higher inflation, that should be supportive for gold. Yes, but it also means higher rates for longer, if not an actual hike in rates. Remember, gold does not pay a dividend. Higher yields will be a headwind for gold. So you're seeing gold come off a little bit as well. But at the end of the day, we're basically pricing the next move from the Fed into the close of the year. 62% will be holding rates where we are right now. By March, by January, building consensus that the next move will be a hike. So that's the backstory of what we're seeing here as far as the dollar crosses are concerned. So sorry to segue there really quick, but I just wanted to cover the PPI implication. So that's Aussie dollar waiting for a opening range break for the week. Here's dollar CAD. I put out a piece for StoneX TV earlier today on this. It's up there right now. Here is that key region of resistance that we've been talking about since the start of the week. Actually responded yesterday, 37.25 into 37.33. September lows, August lows, 38.2 retracement, the November decline. The objective yearly open in magenta there, all of it converge on the median line, and that was 37.26 into 37.33. It's exactly where we topped out yesterday and pulled back. So what do we do from here? This is the major pivot. It's also the February highs. If this pullback, if that low is a more significant low, that's the pivot break that needs to validate the shift in trend. Okay, momentum is broken above 50 for the first time in basically a month, but this is the level that we need to clear. Huge pivot in price. Here's the 4-hour chart again. Here's the initial advance. Momentum here doesn't look quite as concerning. A little divergence going on here, but look, at the end of the day, if dollar CAD is heading higher on this stretch, the weekly low should hold at 36.48. Topside breach above 37.33 on a daily close basis opens up the potential for topside resumption of this near-term uptrend. You'd be looking for 38 proper. 38 is going to be the 618 of the drop off the high from March and the 200-day moving average. So that converges on slope basically into the start of next week. But that's the implications if we were to breach right here. All things held constant, dollar CAD is trading right below pivotal resistance into the start of U.S. trade. Questions on Loonie? All right, 3% off the highs. Now we're 1.3% off the lows. So Loonie making a attempt at resistance here. So dollar yen, not really much I want to discuss on this. We're making a slow crawl back above a key pivotal region. I have no business in this trade, guys. Here's dollar yen on the daily chart. So the pivot zone we've been talking about the last couple of weeks has been 57.42 and 57.70. Was a beautiful hold all throughout last month. Break fueled the accelerated decline into key support, which registered on Wednesday of last week. Here's the recovery. Okay, so what is it? What are we doing right here? This is still a key pivot. 57.70 is the high day close from last year. 57.42 is a basic 38.2 retracement of the advance off the yearly low. You've got the highs from February, the pivot from March, the low from April. All of it's right here. So take it for what it's worth, guys. Still think that the long side remains vulnerable. You're testing the resolve of the Japanese officials. Key support is still 53.40, 55.40, excuse me, to 54.70. Yeah, there's not much to update here. So that's dollar yen. Any other specific questions on the yen crosses are welcome if you have them. Last but not least, here's Swissy. Swissy with a nice little recovery here, trying to buckle through that resistance level, but it's not getting much follow through. I want to see what happens here. Interestingly enough, there's momentum right into 60 and kind of topping out for the last couple of taps there. We'll see what happens here today. At the end of the day, like I said, bearish invalidation is still 78.62, 78.75. That doesn't change. This was initial resistance. We want to see what happens here. This is the monthly open. This is the April low day close. So it's still kind of a pivotal region I want to watch. We haven't marked a daily close above it yet. Here's the daily close. So that certainly would be helpful, but we're right slap in the middle of the monthly range. Not really, kind of losing favor. The whole point of this, that we started covering this at depth, was the fact that we were heading into this key support that stopped the advance earlier last month. The median line was there. We were looking for reaction. Here's the rebound. This is your first level. So if you're still holding long exposure, it's a good sort of area to reduce position size, raise protective stops, get a little bit more defensive. From a new exposure standpoint, you're looking for either like an exhaustive move through here and a break back below to validate resumption of downtrend. There's nothing until 77.30s. Or if this holds on that slope, or if the near-term downside holds here, still could get that stretch towards 78.60s. So we're kind of mid-trade here on Swissy for the potential of a new move, but all things held constant, you're basically trying to pivot above that monthly open. As always, guys, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals here. Swissy with the rebound off supports, Fibonacci support nonetheless, and last month's low. All right, so where are we at with gold? Here's what gold's doing right now. So we're getting that near-term pullback. Remember, 47.42 is the level of resistance that we've been talking about. That's the 618 retracement from the decline off the April highs, and the median line was there earlier in the week. So that held. Slope support held yesterday. Here we are making another attempt. At the end of the day, the objective view of this is that you have a very clean weekly opening range in view, preserved, intact. Downside break opens up the monthly open and the 618 of the rally off the low. That's 46.05 into 46.22. Look for reaction there if reached. Bullish invalidation, or I should say the level that would mark resumption of the potential February downtrend or the January downtrend would be a break below this key level. So that's still 45.40 into 44.92. That's still this zone. That's the zone the bears would need to kind of reassert the downside. Right now, the threat is if we're going to break this near-term upslope, you see that washout towards 4,600. Nice round number, 618, monthly open. There's a lot there. Look for a pivot zone near that drop if reached. So that's the move on gold. And it moves in line with, like I said, the fundamental kind of shift in that, man, the most likely next move from the Fed's going to be a hike. That is gold. The oil trade still continues to drift higher as well. Here's what oil looks like. The 100, 101, 101.50 level we've been talking about since March. We've broken back above it, and it looks like we just tested out support. So again, you're back in that zone where any headline could set this off for another rally towards like 110, 109, 60s. So not interested in this setup. It's interesting to see that this slope that we threw on a couple of weeks ago actually is continuing to pay dividends. Here's it catching the highs this was on Wednesday. That 25% parallel, little messy, but on a closed basis, almost catching the low. Here's the median line, just stellar. Resistance, pullback, breakthrough, acceleration, support. If that pivot is legit, next route up or next easiest direction would be for a little bit pump of a higher here, or of a move higher. Obviously, again, completely headline event driven. So we'll be tracking those headlines. And I'll keep you updated on MB Forex if anything comes out. Last thing I wanted just to touch note about real quick was Bitcoin. So for the last week and a half, we've been talking about this key zone at 81,038. That's the 100% extension from the advance off the February low. That was also uptrend resistance. That's just the parallel of that basic slope off the lows. So for the last couple of days, it looks like we've been trying to make a move through that, and we haven't been able to do it. And while we've marked a few daily closes above, momentum is highlighting that the top side still might be waning. So here's price action with a higher high. Here's the oscillator with a lower high. Both those reference points below 70 suggest maybe a little bit of a kickback. That was the story on Monday's webinar, was maybe we get a little bit larger of a kind of exhaustion off this move. It's been a slow grind lower. Guys, look, the trade is still actually constructive, but the threat is for a pullback from here. The real test initially would be 74,434 into 76,159. That was resistance for over 2 months before the breakout last month, and then test of support. That's your first spot. Note that 76,159, right above that is the objective monthly open. So again, lateral levels objective, right? It's not Mike Boutros' opinion, not FOREX.com's opinion. In fact, slope subjective. So that's a key region, a pivot zone in price. Bullish invalidation, the level that would need to break to suggest, hey, there's actually a new low in store for Bitcoin before the reversal higher, is 70,531 into 70,283. That's the objective low day close for the year and the low week close for the year. Both of those converge on uptrend support. So if we're heading higher on this stretch, to put things in an easy stance, if we're heading higher on this stretch, losses should be limited to this zone. Need to close above that slope to mark resumption, 85,273, and the yearly open comes in at 87,500, basically. If we break below this level, the threat is for a larger pullback within that February uptrend. Okay, bullish invalidation, 70,531 into 283. So still looking a little wonky here, still looking for the potential, or still flagging the potential of a little bit of a threat of a pullback after this breakout from the initial January downtrend. All right. Okay, that was a mouthful. That's everything I have on my plate for this morning. Keep in mind, again, those retail sales figures hit tomorrow. The headlines are going to be coming out of China. The Trump Xi summit starts. He just arrived a couple of hours ago. So there's a whole host of CEOs with him. You got Jensen Huang with him. You got Elon Musk with him. CEOs from a whole bunch of different top U.S. countries. So it's going to be really interesting to see what the tenor and tone of that meeting looks like. At the same time, at the backdrop is this ongoing war in Iran, and we're looking for headlines with regards to any kind of negotiations or breakthrough on that front as well. I'll keep you updated as always on MB Forex. Till then, best of luck trading. I'll see you guys tomorrow morning. Cheers.